All right. Welcome to Clarity Sessions with Bill Fauth, where we cut through the noise and bring you real, practical clarity on money, business, mindset, and everything in between. Now, if you're a mompreneur, a business owner, or someone who's just ready to take more control of your financial life, this is your space. No fluff, no overwhelm, just simple, powerful insights you can actually use. Because let's be real. When you got the right clarity, you make better decisions, and better decisions lead to a whole different life. And so let's get into it. Today's question is,
does someone need to track every expense or just the major ones?
So the question is, do I need to track every single expense? And the short answer is yes. And the reason you have to track every single expense is because in the process of, the idea, again, drawing the circle where this is all your income and we draw a line down the middle and 50% you're keeping and 50% is going out to taxes, and we want to make it so that you're saving another 25 or 30% and stays in your pocket. The way to do that as a business owner is you need to be able to justify what you're spending as a business expense. So one of the things that we need to know is that money that's circulating that's already going out, if it's money that you're spending that's personal, we don't care. But we don't know whether we can circulate it as a business expense and reduce that taxes or, create the 25% tax savings until we know what you have. So if we don't know that's going out, we can't track it, and then we can't document it, and then we can't justify it in an audit if we have to, or as a business expense. So here's the thing. One of the ways of doing that, every business today has a debit card. So every business has a credit card. And typically the way you pay your bills now is with a debit card or with a credit card. So by definition, we already have everything that's going out on your bank statement or on your credit card statement. So that's pretty easy to keep track of things. If you're using your checkbook or you're writing checks to pay things, then we also have your bank account to do that. And what we do is we take that information, that raw data, and we put it into an accounting system. We use QuickBooks or Quicken, or not so much Quicken, but some kind of an accounting system where it structures the information into revenue, that's my income, which is money that came in from clients, whether it's from Venmo or Zelle or PayPal, that kind of thing, or they wrote you a check or they gave you cash. That all shows up as revenue. Then we have all the money that went out of your checking account and went out of your credit card as an business expense, and we classify it as the different expense categories that we put on your tax return. And this way we have how much is tax related, and then there's going to be a certain amount of money that's left over that is your personal expenses, which aren't tax deductible. But now at least we know what came in, what went out, and how do we justify it as a business expense, or can we justify it as a business expense, or how do we justify it as a business expense? So the idea is that in our digital age, that way to do that is already happening. So the short answer is don't pay anything with cash, pay it with a debit card because it potentially is a business tax deduction. Now, however, if you do have cash and spend it on things that are not likely to be a tax deduction, like your groceries, that kind of thing, that you're not going to be able to deduct.